Welcome to Explain the Charts, where we break down the market with a focus on both news events and technical chart analysis. Today, September 29th, we're diving deep into USDCAD, examining the latest market developments and what the charts are telling us. The recent Google search results show a mixed bag of opinions on the future of USDCAD. Some analysts are predicting a sideways trend, others are cautiously bullish, while others are leaning bearish. This volatile market presents opportunities for both long and short trades, but it's crucial to understand the factors driving price movements. We'll look at the 1-day, 1-hour, and 15-minute charts to identify key price levels, trends, reversals, support and resistance, and other important indicators to guide your trading decisions. Looking at the daily chart, we can see that USDCAD has been trading in a range between 1.34 and 1.36 for the past few weeks. The recent Google search results mention that the USD is under pressure due to market pricing for rate cuts and better global growth expectations following recent Chinese easing measures. However, aggressive rate pricing could be scaled back if US data starts to pick up. This uncertainty in the market is reflected in the range-bound trading we see on the daily chart. It's also worth noting that the Canadian dollar has been appreciating against the US dollar in recent weeks, indicating a potential shift in market sentiment towards the CAD. This could be due to factors such as rising oil prices, which benefit the Canadian economy. If we zoom in on the past few days, we can see that USDCAD has been testing the 1.35 level, which appears to be acting as a key resistance level. The 1-hour chart provides us with a more granular view of the price action and helps us to identify potential short-term opportunities. The recent Google search results mention that the US dollar to Canadian dollar stabilized while the US dollar to Japanese yen struggled. This indicates that the CAD might be showing relative strength in the market. On the 1-hour chart, we can see that USDCAD has been consolidating in a range between 1.347 and 1.352 for the past few hours. The price has been testing the upper end of this range, but so far it has failed to break through. This suggests that buyers are struggling to push the price higher. If we look at the recent 1-hour candles, we can see that the price has formed a series of doji candles, which is a sign of indecision in the market. This could be an indication that the price is about to break out of this range, but the direction of the breakout is uncertain. Traders should watch closely for a breakout signal, such as a strong candlestick pattern, before entering a trade. Another important factor to consider is the recent news about Canadian GDP. Analysts expect a weak reading, which could put downward pressure on the CAD. This could lead to a bearish breakout from the current range on the 1-hour chart. Traders should be aware of this potential risk factor and adjust their trading strategy accordingly. Let's take a look at the 15-minute chart to get an even closer look at the recent price action. The 15-minute chart shows that USDCAD has been trading in a tighter range between 1.347 and 1.352 for the past few hours. The price has been bouncing back and forth between these levels, suggesting that neither buyers nor sellers have a clear advantage. We can see that the price has been forming a series of small candles, which is a sign of low volatility. This low volatility environment can be challenging for scalpers and intraday traders, as there may not be enough price movement to generate profitable trades. However, it's important to watch for any signs of a breakout, which could signal a shift in market sentiment and create new trading opportunities. For example, if the price breaks above the 1.352 resistance level, it could signal a bullish breakout. Conversely, if the price breaks below the 1.347 support level, it could signal a bearish breakout. In conclusion, USDCAD is currently trading in a range-bound environment, with both bullish and bearish signals present. The recent news about Canadian GDP could influence the market, but the direction of the price movement is uncertain. The 1-day chart shows that USDCAD is testing the 1.35 resistance level, while the 1-hour chart shows consolidation between 1.347 and 1.352. The 15-minute chart shows a tight range with low volatility. Traders should closely watch for any signs of a breakout from these ranges, as this could signal a shift in market sentiment. If the price breaks above the 1.352 resistance level on the 1-hour chart, it could signal a bullish breakout and potentially lead to further gains. Conversely, if the price breaks below the 1.347 support level on the 1-hour chart, it could signal a bearish breakout and potentially lead to further losses. Traders should also be aware of the potential impact of the upcoming Canadian GDP release and adjust their trading strategy accordingly. The upcoming release of US PCE data could also impact the market. Overall, USDCAD is a volatile currency pair with both upside and downside potential. Traders should carefully analyze the market and chart data, as well as news events, before making any trading decisions.